Unemployment claims surged to over 6 million. That had the potential for really putting a damper on this market today, but we kind of got bailed out by a surprising hero, one that we haven't been able to talk about a whole lot, and that's oil prices. Oil prices surged today as there were some rumors floating around that President Trump was suggesting that the possibility of Russia and Saudi Arabia coming together on a production cut agreement is out there. Now, whether that ultimately proves to be true or not is anybody's guess, but at least for one day we saw energy and the energy stocks rallying strongly and helping kind of support this market when it needed it most. So we'll see if that carries us forward. Tomorrow happens to be another important day as we do have the March employment report coming out. Remember, that comes out the first Friday of every new month. So I'm going to be watching that very closely and see how the market reacts to that. I think everybody is assuming it's going to be a pretty lousy number. So if we can get a positive stock market result in the face of that bad news, that could be maybe viewed as a bit of a tell that the stock market is maybe looking for more positive outcomes going forward. On the other hand, we also have to remember that it is Friday, and like we've seen more often than not in the last month or so, Fridays oftentimes are a little bit more nerve-wracking for those that are long stocks, as a lot of people tend to decide to flush out of their account right before the weekend, so that way no negative news could impact them by the time markets open back up on Monday again. So it's going to be a really interesting day here tomorrow. So we're going to talk about all of that and see what that means for our posture. We'll then get into our trade application, where I wanted to focus on a beaten down dividend stock that might be at an interesting level to take advantage of with a sold put. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's April 2nd, 2020. First of all, if you're new, welcome aboard. Remember to go over to YouTube, click subscribe on our channel, then go down to our description area and make sure you're signed up for our email distribution list, where we can remind you regularly whenever we have these videos posted, and also give you a heads up on what stocks are giving you overbought and oversold cluster signals using that market forecast indicator within the S&P 500. In addition to that, we're heavy users of Twitter. I know David and I have both been more active than traditionally have as a result of all the chaos on the markets here recently. And of course, David has a little bit more of a focus on technical analysis, whereas my focus is a bit more on dividends and long-term investing. But hopefully you're following both of us to get a good feel for what sorts of news items are impacting our thoughts and how we think about the market. So if you're not following me yet, I would encourage you to do so. My handle is @BrandonVanZee. And we certainly appreciate those of you that click like and retweet on these Market Outlook related posts to remind us that you want us to do these on a regular basis. Remember, these are completely free videos, so we hope that by giving you our time, that you guys get a little bit of opportunity to share your enthusiasm with the rest of the world through social media. And speaking of which, we also have presence on Facebook. Feel free to join our group over there at the web address embedded in the logo in front of you. All right, let's go ahead and jump into our charts here. And as you can see, we've got chart 6D pulled up yet again, as this was another day where we moved up or down more than 1%, which has been pretty commonplace here in the last month and a half. Interestingly enough, as you kind of look at this graph here in the middle, that will show us the big up moves and the big down moves that we've had in the last month compared to the entire previous year. Some of you might be recognizing that it seems like the rubber band was stretched the most kind of in the middle. Here was the biggest down day and here was the biggest up day. And since then, we've been kind of getting somewhat less exaggerated movements. Now, again, that needs to be taken in context. This was still a 2% plus day, and we would have fallen all over ourselves a year ago if we had had a 2% up day in the market. But that just goes to show you how our mindset has been retrained by this volatile market here. So the less volatility that we see generally means that the bulls are getting a little bit more comfortable with where the price levels are here at this time. Now, obviously, it's not a guarantee. It's just a way to kind of analyze the volatility. You can see that the VIX did fall again today, so you can kind of view that through this purple line down below here, and the VIX ended the session at about 50. And remember, it was above 80 back here in the middle of March. So while 50 is still an extremely high level, you can kind of compare that to where we had been trading previous to this month, and the highest level that we had been on the VIX was really about 25 back here in August. So despite the VIX falling today, yet again, we are still double the volatility environment that would have been considered high back in August. So this is still an area where selling puts could make some sense, and we did that in the video on Tuesday, and we're going to do another one here a little bit later on in the video today as well. So remember, when the VIX is high, especially when it's high and falling, oftentimes that can be a good environment for selling puts, because a lot of times it means you're getting a little bit of extra juice out of your premiums compared to normal market environments. And if the VIX is falling in a bit of a trend like we've seen here for the last couple of weeks, it oftentimes means that the bulls' prices are stabilizing, and selling puts is technically a bullish strategy. So anyway, looks like we had an interesting bullish engulfing pattern here today, as well as you can see today's body engulfed yesterday's body, so that could have been perceived as a bullish sign there as well. Let's go ahead and take a look at our next chart. In this case, we'll pop on over here to 4B. And take a look at the foregrid. And remember, the background colors of these charts will change from pink to green depending upon what the posture is. And right now you can see that all four of our charts have a bearish posture. Now remember, 2 days ago when I was last with you, we did have weekly bullish postures, but as I was saying at that time, be careful with that, because right now the expectation is still that we're going to have to kind of suffer through some uglier markets going forward. And anytime that we have price below a falling moving average, like we did on that session a couple of days ago, you just don't want to go overboard with the philosophy that, hey, the market forecast technical indicators posture is bullish. Yes, you can take bullish trades, but as I mentioned at that time, make sure that they are properly position size. In other words, be very conservative in a moment like that compared to when you actually have a legitimate bullish trend on your hand. So right now, this is a market that is proven guilty first, and then we'll see later if it deserves to be considered innocent. So right now, you just got to be extra cautious, because the path of least resistance continues to be to the downside. And as I mentioned a moment ago, we do have a bearish posture, strongly bearish posture back in effect on all four of our charts here, despite today's pop higher. Now I mentioned the bullish engulfing candle on SPX. We also got a bullish engulfing candle on Dow Jones and also the NASDAQ composite when you're looking at body to body. We did not receive a bullish engulfing pattern there on the Russell 2000. That was a little bit of a disappointing, only 1.29% improvement in price there. So the small caps have once again lagged, and that has been kind of a continual theme. In fact, those of you that are part of my my swing trading class, my factor-based swing trading class, you'll know that the small cap factor, along with value factor, had been some of our weaker factors out there recently, as I discussed in class yesterday. So that is a trend that we are putting up with right now, where we do see a bit more bullishness out of some of the mega cap companies out there. Your Apples and your Microsofts are certainly down in the last month or two, but they're down less than what you see in the small cap universe. So you got to be a little bit extra careful there with small caps. Remember, they can be manipulated a little bit more, both up and down. And right now it seems like prices are being pushed lower in the small cap universe, and rightfully so. I mean, there's a lot of a lot of controversy out there. And, as a small business owner myself, along with David of Market Scholars, we've been trying to follow this news on, some of the small business stimulus plans and different things like that. But I mean, it's a nerve-wracking environment out there, and there's a lot of small companies that are just on the brink, and they may not come back from this whole COVID-19 thing. So I think that's being reflected to a degree in the small cap stocks there as well. And yesterday we heard news that there was a small cap oil and gas company, Whiting Petroleum, which did a lot of work up in North Dakota in the Bakken Shale, that filed for bankruptcy. So, you're going to have some of those smaller oil and gas and smaller banks and different things like that are really struggling through this environment right now, not knowing what the future holds or when they can get back to a normal course of business, and they may just have to file for bankruptcy. So small caps, dangerous place to be right now. But obviously, for those of you that want to take advantage of that for longer term purposes, perhaps dollar cost averaging into it with a small cap index fund in your 401k might make sense, because you're not going to see the entire index go belly up or bankrupt. You might have individual companies do that, but this could very well end up being a good time throughout history to be putting a little bit of money into small caps while there is so much concern and prices are so low. But if you're more of an active trader right now, small caps are just simply not the place to be. So anyway, decent day on the markets. We were up effectively, around 1 to 2% on these four indices, but it wasn't enough for us to revert the posture back to bullish. We continue to have a bearish posture at this exact moment in time. Let's go ahead and take a look now at our 3 green arrows setup. And on this particular chart, we don't have a whole lot to share with you here in this case. Usually I like to bring to your attention, anything that has changed, and nothing has changed. It's exactly the same as what we saw here on Tuesday when we looked at this chart together. Basically, we have green arrows on all 4 of these charts for the MACD histogram and the stochastics, but we have red arrows across the board on all 4 charts on the 30-day moving average, and that's exactly where we stood 2 days ago. So no change on the 3 green arrows analysis. Let's take a peek here at the 1040 crossover method now. And remember, this will be weekly candle charts. So these will stretch back over 3 years in time. Each one of the candles is 1 week. And when you're looking at the blue line on each of the charts, that's the 40-week moving average, and it's the slower of the two. And then the orange line is the 10-week moving average, and that's the faster of the two. And so as you can see right now, things stand pretty much the same way that they were last week. In other words, we have death crosses across the board. And that is widening as we speak, right? We haven't had enough of a push off the bottoms yet to see those lines start pinching back together again. Remember, one way to identify that concept would be to look at these purple lines that show up directly below the price graph. And if the purple line continues to go lower, it basically means that this orange line is separating further away from the blue line. And in a case like this, where you have a negative crossover, that would be considered bearish, because it just basically means you haven't found that the bulls have been diligent enough to stop the down move quite yet, and there's still time that needs to be taken for this bottoming process to be formed. And that's kind of my mindset right now as well. What I've been telling my students is, I think we've taken enough pain from a price perspective, but I'm not so sure we've taken enough pain from a time perspective yet. And these types of things usually don't get resolved right away, particularly given the situation we're all in right now, where all of us are holed up in our homes and quarantined and not out spending money, and the economy is effectively frozen. The U.S. stock market was not established for this type of a scenario. So remember, the whole purpose of investing in publicly traded companies is to become an owner in those business and share in the profits. Right now, there's just simply not a whole lot of profits because nobody's spending money on most of those things that they used to, unless you're happening to be a healthcare company or a consumer staples or something like that. So this is a very, very difficult moment in time for the publicly traded markets. And right now, we don't know how this ends. We have no idea what the resolution is. I had my question and answer session with my premium students earlier today for a couple of hours. And, we chatted about the idea that 2020 will likely be looked back on throughout history as a moment where you could have picked up excellent values for your money as an investor. The problem is we don't know if that's early in 2020 or is it late 2020. And my gut feel right now, because of the unknowns that still exist out there, is that we may very well have an opportunity for even better prices in the months to come. So that's why you've got to tread cautiously. And while it makes sense to start putting some bullish money to work here in the highest quality of companies, you might not want to go overboard and do everything right now. You might want to kind of scatter your bets to a degree. And that way, if we do fall another 20% from these levels throughout the next several months, that you've got some of your money working for you at that time as well. For those of you that are, short-term active traders, you're obviously going to be following the charts a bit more. And right now, as we can see with these 1040 crossover methods, we have bearish conditions. And so you're probably hunting for bearish setups right now rather than thinking about putting your long-term money to work. So what you do obviously is up to you and your preference there. But, there is room in this type of a market for the long-term bullish investors and the short-term bearish people to kind of be on the same page. A lot of it just revolves around the timing and what occurs here with any potential solution with the coronavirus. Let's go ahead and now take a look here at our next chart setup. Let's do some 12 grid analysis starting with 5A. This will be our asset class 12 grid. And as you can see here, we got a lot of pink charts on the board. The only two that are green at this point are long-term treasuries and the US dollar. And the U.S. Treasuries is kind of a safety play, as a lot of people have been intentionally getting out of the riskiest assets and looking to see where their money could kind of retain value. And right now, long-term government bonds happens to be one of the few places that has allowed someone to retain or even improve upon their capital. The high yield bonds and the foreign bonds really haven't been doing as good of a job. It's really just specifically U.S. government bonds that have been holding up the best here. And then in the case of the U.S. dollar, kind of like I was mentioning in the presentation, I think it was on Tuesday, remember, we would actually prefer, in an ideal world, to see the U.S. dollar be weak if we want to be long the stock market. That's not happening right now. We had some hints of that here maybe a week and a half or so ago, and during that time period we were able to see the stock market rise at the same time that the US dollar was falling. But you can see the problem or the dilemma that we're being faced with right now. UUP bottomed exactly where it would make sense. In other words, that rising 30-day moving average, and for the last 4 days or so, it's been kind of bouncing up and off of that moving average. So if anything, it appears like the dollar wants to strengthen from these levels rather than the opposite. That could have some impact on gold, but interestingly enough, gold still has that bearish posture, but things look a little bit more promising on gold, if you want to be long it, today than it did 2 days ago when I was doing the video. I was saying how disappointing gold was at that time. That was a really ugly candle right there. Well, look at what happened. The last 2 days, we went right back and erased the gains of that one ugly candle. All of a sudden, we're back above that rising moving average again. And, it's kind of aggravating to see whipsaw action. I will be very curious to see how this shakes out, because my hunch, and so far my hunch hasn't been exactly accurate, but my hunch is that gold's prospects should improve given the types of stimulus packages that are being doled out right now, trillions of dollars worth. And a lot of times when there's more money in the system, gold prices generally hold up reasonably well. So right now, my gut tells me that gold should hold up, but I also get the sense that a lot of people think that way. And sometimes, as David has stated before, the markets just are out there looking to cause the most pain. And if everybody thinks that gold is going to go up because money is going to be pushed into the system, perhaps this is the market's way of causing a pain by sending gold prices lower. So we'll see where that takes us, but just a quick update on that, because it is different from what we saw just 2 days ago. Gold is on the stabilization end of the conversation now, and improved prospects as a result. So we'll keep our eye on that, and I'm sure I'll be pointing out any sort of movements there, as will David, if you guys continue to tune into these videos, assuming you want us to continue to do them. Again, make sure that you are clicking like for us on Twitter. That's effectively what David and I use as our proxy to determine, are you guys getting value out of these videos or not? So if you are somebody that's on Twitter and you want David and I to do them, make sure you let us know by clicking like there. These videos certainly allow David and I to improve our skills, but we could do that without creating a video as well, right? So these are our free videos, and in my case, with my wife still working, I have to now wait for her to get back from work to take over watching our 5-year-old that I've been doing all day. And then, this pushes my day way into the night as well. So not trying to come up with a sob story there, but just reminding you that, this takes time out of our day. And if you appreciate the fact that David and I are still willing to do this for you for free on a daily basis, the best way to let us know about that is by clicking like for us there on Twitter. And we do thank you for that. Oil. Let's talk about that here briefly, because that was really the biggest story of the day, at least from my perspective. Oil prices surged. You can see here in the case of USO, it was up 16%. And you can see what that candle looks like there. Now, obviously, we got to be careful for getting too excited about this, because every single time in the last several months, if not years, that oil has made a big move, it has been quickly reversed and erased. So will this time be different? Hard to say, but it was a pretty awesome day for oil. We remember one time, I can't remember exactly what month this would have been, but at one point in the last year, you had those refineries in Saudi Arabia get bombed, and on that day, oil prices surged, but within just a week or two, it had given back that entire move. So I think a lot of people are just sitting here waiting to see, can oil hold these levels, or is it going to be the same old story where this is just a quick opportunity for those that were long to get out at slightly better prices, or for those that like to be bearish to apply new bearish trades to oil? Right now, it probably makes sense to be a little bit cautious around it, because as you can see, despite today's big move higher, we still have that pink background color telling us that the market forecast still suggests that this is a bearish posture. That green line is way entrenched down below in the lower reversal zone. It's not even close to emerging above that. Remember, that green line would have to get above 20 before this background color would change to green. So it's going to require several days or weeks that would look like these types of moves before you can push that green line up there a bit higher. But hey, it's a start, right? And every eventual reversal has to start with big moments like this. So whether this will actually be the moment is anybody's guess, but it is a moment that can add to the bottoming process. I mentioned Whiting yesterday going bankrupt. As hard as it is for me to say, because I know this isn't fun for people to endure, but I really think that's a positive for Whiting to go bankrupt. In fact, I kind of hope there's a lot more smaller oil and gas players that do go bankrupt, because I think they're kind of adding to the supply problem right now. And again, for those of you that work in those industries, I'm not wishing ill will upon you. I'm saying that merely for what would be viewed as supportive to oil prices themselves is if the industry itself slimmed down and it cut the fat, and just the strong survived. At that point, you could deal with the supply a little bit better than if you have hundreds of small mom and pop operators out there that are all just drilling the brains out, trying to keep the lights on. That's not really helping the industry. So we'll see if that happens or not, but at least we do have that one instance of it here yesterday, and we'll keep our eye on that story. Of course, tomorrow a lot of those oil executives are going to be flying to DC, and so that has the possibility of impacting oil prices as well, depending upon what they say and what the market's reaction to it. So tomorrow could be maybe a little bit more of a volatile day for oil prices as well, depending upon what you hear out of DC. All right, let's go ahead and take a look at another 12 grid. In this case, we're going to take a look at the U.S. sectors 12 grid. This is chart 5C. And in this case, we only got a couple of green charts here as well. In this case, you got healthcare and staples, and that's kind of been, the story of this first quarter of the year. Of course, now we're into the second quarter, just barely. But if you could say that there was any sort of semblance of strength out there, perhaps there's a few instances of it in the consumer staples and healthcare. Healthcare for, the obvious reason of trying to fight the coronavirus. So if I were to right click and maximize this healthcare chart here and show you some of the standout leaders there, Moderna looks really strong. In fact, this was getting very close for me, being one of my trade applications here tonight. So for those of you that are looking for bullish trend trading ideas, Moderna, mRNA, it continues to firm up. And I know it's hard to pay ever increasing prices for your merchandise when all the other merchandise is going on 50% off sales. But this is a sign that the market likes this company. And agree with it or not, price is suggesting that this stock is entrenched in an uptrend. Now, it does come with risk. This is a company that's directly involved in, trying to fight the coronavirus, and it's possible their research goes astray and this thing ends up in the dustbin of history. So you got to be a little bit more careful with it, but obviously that looks pretty strong there. Additionally, Regeneron is another one that's kind of in that fight, and you can see Regeneron in the healthcare space also looks pretty good. Johnson & Johnson, not nearly as good as those other two, but also in that fight against the coronavirus. And then Abbott Labs, has been talked about a lot in the last week with their new test kit that they've got coming out. And you can see this stock is now trading above the moving average. Not a whole lot of companies can make that claim that they're trading above their 30-day moving average. So although the chart doesn't look nearly as strong as Moderna, from a trending perspective, at least you can make the claim that this one is trading above its 30-day moving average. And the vast majority of the stock market, especially in the S&P 500, cannot make that claim. So there's a few of those healthcare names that are standouts. In terms of the consumer staples, here's what that consumer staples chart looks like. Again, that's the only other green one on the board. But you've got standouts within that group as well. You've got Clorox, which I think we've got an ongoing trade on in this particular presentation as well. I think I did a bull put spread on it some time ago. And that continues to behave itself. This is the type of behavior we like. We like it when the stock is gradually moving its way higher, particularly during a time when the stock market itself is getting clobbered. There's a lot of relative strength here in Clorox. And, there's maybe others like Kroger, which we've talked about as well. And you can see Kroger had a very nice day, up 3.6%, back up above a rising moving average right there. I noticed that Colgate was up nicely today. Colgate up 4%. Remember, a lot of times I had this conversation on Twitter with one of you back and forth when Colgate had a 3% yield, and it was on this candle right here. So you had to be pretty quick about it, but you could have got Colgate with a rare 3% dividend yield, and it's been a long time since you had that opportunity. Anyway, kind of the back and forth I was having with this person on Twitter, they were, kind of making the implication that it was a toothpaste company, and I had to remind them that it's also a soap company. And with all of the the ads and the celebrities and the politicians, and every time you turn on the TV, somebody's telling you to wash your hands. You would think some soap is going to be sold there. So remember that Colgate Palmolive, it's their Palmolive division that sells soft soap from a liquid soaps perspective. They also sell Irish Spring bars for the shower and bath and all that kind of stuff. So they do have an element of their business that could benefit from this whole craze of washing your hands several times a day. Whether that proves to be something that lasts going far into the future is anybody's guess. But I could see somebody making the claim that after this coronavirus is all said and done, people will be washing their hands more religiously in the future than they had been in the past. They might not be doing it at quite the rate that they are right now while the scare is alive. But if you're going to look at pre-2020, how often the average person washed their hands, and then post-2020, my guess is that this could stick for a while, and there may be more soap that's sold as a result. So anyway, there's a few consumer staples out there and healthcare companies that are doing reasonably well, but for the most part, it's been a difficult market out there, and it's been you've been better off being cautious in this particular market environment. All right, let's get into our trade application example here for the day. And I wanted to do a similar trade as I did on Tuesday. In other words, selling a put on a stock that has a long history of dividend increases, but I wanted to take it a slightly different direction. So let me explain. I'm going to pull up our dividend stair-step chart here that we use in my premium dividend growth investing classes. And I want to pull up ticker symbol ALB. This is Albemarle. This is one of the newest Dividend Aristocrat companies. The Dividend Aristocrat list gets announced in late January of every year, and ALB was added this year for the very first time ever. And so they've raised their dividends for more than 25 years in a row or more now, and they also happen to belong to the S&P 500. Now, many of you are probably not familiar with this company at all. It's not it's not Coke, it's not Procter & Gamble, it's not Pepsi, it's not Colgate or Clorox. Walmart, all these other interesting aristocrats. This one is a little bit lesser known one, and it's more of a mid-cap company. What they do is they are a miner of lithium. And, for those of you that are familiar with electric cars, you'll know that lithium is currently used in a lot of the batteries for electric cars. In fact, earlier this year, Albemarle was doing reasonably well. You can see that in December, it was like a $65 stock that ultimately went up to $100 in just a few months. Now remember, that was well before the coronavirus scare, and what was happening at that time was Tesla was going ballistic to the upside. So if we look at Tesla, you can see it's been a wild ride. So as Tesla went ballistic to the upside, a play like Albemarle, which is a lithium manufacturer or miner, was kind of tied to that idea or that theme. Now, as Tesla has come plunging back down to earth, you can imagine that has also affected Albemarle. And you can see that this stock has fallen from basically $100 down here to just below $50 at one point last week. Where we stand right now is at $53.66. So this little yellow line that you see right here, I know it's hard to see, but that little yellow line that it crossed through last week is your 3% yield level. So this is a company that currently yields 2.87%, but normally this is a company that yields, let's call it about maybe 1.7% traditionally over the last decade. So this is a really rare moment in time that you can get about a 3% yield on this company. You can see back here when it kind of fell apart back in 2015 when we had that flash crash day back in August 2015, it was trading at about 42 at that time, and the 3% yield level would have been down here at about 39. So you got within maybe $3 per share of having that opportunity back there as well. But otherwise, this stock has skyrocketed, and then even when it fell, you never really had that opportunity until the entire stock market just started melting down a couple of weeks ago. So this is one really close to an important 3% yield level. It's also one that you can see from a horizontal support level might be trying to establish a bottom of sorts in this particular range, because that's where it kind of found a bottom back here in 2015, and it's also where it kind of found a bottom back here in 2011. Now, during those two times, it was not considered an aristocrat. Remember, it only became an aristocrat this year, so maybe a few more eyeballs are on it as a result. Now, some of you might be wondering about the timing of this, and one of the big news stories after the bell tonight, I guess this is one of the benefits of having to wait for my wife to come home before I can produce this, is that I get to the advantage of seeing what's happening from an after-hours perspective in the stock market. And some of you might have seen that Tesla was really rocketing higher after hours. You can see that Tesla closed today's session at $454. the bid price in the after hours session is $534. So this stock is up like $80 per share after hours. So Tesla is almost assuredly going to have a big session tomorrow, which has me wondering, is ALB going to go along for the ride? Is this what it takes to kind of get Tesla out of its downward funk and right back to the upside? And if that's the case, will Albemarle go right along with it? Now, one other thing I wanted to point out before we get to the trade is if I were to come over here to, let's just pull up, 4A. I want to look at a chart where we have our cluster signals, because one thing did catch my eye with Albemarle here as well. If we were to change this from a daily candle to go to monthly candles, so let's go to the maximum with the M right there, so monthly candles. I wanted to point out that something fairly unique is happening at this exact moment in time, and that is we have a monthly oversold cluster signal. That didn't even occur last month, right, in the month of March. It is happening as of this exact moment in time in April. Now, we have to be careful there because remember, this cluster signal might appear right now on April 2nd to us, but if this stock rallies furiously by the end of April, that cluster dot will disappear. So remember, this is an ongoing situation. All the other cluster signals you see on the chart, they're locked in stone because you can't change price and time in the history, but right now, this monthly candle is still being formed right here. But as of this moment in time, you have a rare oversold cluster signal. The last time we had that was on this candle back here in May of 2019, and you can see we did have a 2-month rally after that moment in time where the stock went from about $63 up here to about $73. So it went up about $10 per share in 2 months immediately following that oversold cluster signal. And then the only other instance of a cluster signal on this entire chart that dates all the way back here to 1994 is we did have an oversold cluster signal back here in February of 2000. That was right during the dot-com implosion, and that stock was trading at a closing price on that candle of $7.53. That stock ultimately went up to $12.38 just 5 months later. So that was, on a percentage basis, a massive move higher, like a 50% move there. So obviously I'm not saying that is a guarantee of something that can happen right here. I'm just saying that prior instances of oversold monthly clusters have responded with reversion to the mean types of moves for this particular company. So what I thought we would do here today is establish a sold put similar to what I talked about on Tuesday with Cisco, but the difference here will be in how far away we go from in the money. You'll recall that on Tuesday when I talked about the Cisco sold put, I wanted to go way down the strike chain because I did not feel comfortable at all that Cisco was attractive at that exact moment in time. It was just giving me the rare opportunity with where the volatility was to sell a put 45% lower than where it was trading there, and I thought that was a pretty good, trade-off for only 17 days within that trade. We're going to continue to focus on the April contracts. Only 15 days left of these, but you still have really healthy levels of volatility. You can see the implied volatility here is 93% on Albemarle. In this case, I'm actually going to go a little bit more aggressive. With Cisco, I was very conservative and I pushed that strike price way down the line. In this case, I'm actually going to go to the first available out of the money strike. In this case, it would be the $50 strike that I want to sell. And I think we can get $2 for it. You can see the last traded price here was actually $2.05 today. And you can see there's a healthy amount of open interest in that exact contract as well. Over 2,000 contracts in the open interest with 100 of them traded today. So, this is not the type of company that usually has a lot of liquidity from an options perspective, but this appears to be a very substantial level for this company. And remember, if this stock were to fall from $53 down to $50, it would give us a 3% yield at that moment in time as well. Right now it's a 2.87% yield. So if we can get filled at a $2 credit here, that would bring our cost basis down to $48. And that seems to be an interesting level as well, because right now the 52-week low is $48.89. In other words, if you kind of were kicking yourself for missing that low a week or two ago, this is your opportunity to try to get that again through the use of sold puts. So let's go ahead and click on the bid price here, and we'll go ahead and do 2 contracts in this case, and I will try to get filled at $2. And I'll even go ahead and put this in for a good till cancel order just in case it doesn't get filled tomorrow. Remember, there is the possibility that this stock could gap higher starting tomorrow morning if traders are involved in it and they see what's happening with Tesla. So we'll just have to see. If we miss it, we miss it. There are plenty of fish in the sea, but at least the theory is an interesting one given the after hours developments here tonight. So let's go ahead, click confirm and send. You can see that we're going to try to bring in $400 for our willingness to buy 200 shares of this stock at $50 per share if this stock were to close below that level 15 days from right now. Okay, so we're going to go ahead and send that in, and we'll see if we can get filled first thing in the morning. Again, thank you for joining me here tonight. Remember that we do have a big day tomorrow from a general stock market perspective with the March employment numbers to be released. And so keep your eye on that pre-market. Remember, I'll be doing the 9 at 9 as I always do. So if you're ever interested in what stocks are likely to move the market tomorrow, and I'm sure Tesla will be on that list, make sure you check out the 9 at 9 either on our website or over on Twitter where you can follow me at Brandon Van Zee. And if you got value out of tonight's video, be sure to click like for us over there as well. So with that, I want to wish you all the best of success with your trades and your investments. Goodbye for now.